Was that a mistake to buy into IBM?
Well, I don't think so, but it could be. I mean, we've owned stocks we've lost money in, and sometimes when stocks go down, we're wrong and we sell them, and sometimes we think we're right, we buy more, and sometimes it turns out we are. I mean, the Washington Post stock, it's not in that list because we disposed of most of it, but we have about 100-for-1 profit in it, but it went down by more than a quarter after we started buying it. So we showed a loss in that, but we kept buying it, and the company bought in its stock, and it all worked out very well. On the other hand, I bought Tesco, it went down, and it kept going down, and I was wrong about the company. If I'm right about the company, the stock will do fine, and I love buying more when they go down as well, and when I think I'm right. And if I'm wrong, you sell them out and take a big loss. And we've done that on a few stocks and bonds over the years. More often, we've made even more money because they went down initially. I mean, Berkshire itself has gone down 50% 3 different times since I've been in control of it. And the first time I was able to keep buying, I had some money left from the partnership, and it went from 90 to 40. And that was terrific. I mean, I was buying it. Some friends of mine didn't think it was so terrific, and that's happened 2 times since then. So a stock going down is a good thing unless the company itself is losing value, and sometimes that's the case, and sometimes it isn't. I don't think it's the case with IBM, but I could be wrong.
Charlie Munger, your partner, said recently that he'd say the jury's still out on whether the reinvention will work. I think he also said that he's neither a believer or a disbeliever in IBM and its reinvention. When you start looking at things, should I assume that you're still buying these shares, or are you kind of waiting to see what happens now?
Well, you'll see what we do quarterly, a little after the end of every quarter. I could tell you this: we've never sold a share of IBM. You mentioned John Deere, but there's other stocks that we buy, and there's stocks we own that have gone down a fair amount. American Express has gone down quite a bit. That's not really different than IBM. I mean, it may be different in terms of what we paid for it, but what you pay for a stock doesn't mean anything. I mean, what means something is where the company's going to be in 5 or 10 years. And I think, Charlie's neutral, I think that IBM will be worth more money. But like I say, I could be wrong. If I'm wrong, we'll accept that.
Okay. Joe has a question for you on this front as well.
Yeah,
Joe?
Warren, when we have analysts on a lot, they do the buy, sell, or hold idea with this. You sound like a hold on IBM right now, just from your body language.
No, I would say this. We're a potential buyer. That is, we're buying different things at different times.
I understand, Warren, but I'm trying to read between the lines because you got big positions and people key off of what you're doing, and you want to be careful you don't say too much. But if you were buying up in the 170s and it's at 130, you would buy twice as much as your original stake to dollar cost average down if you were convinced it was going back to 170. So if in the next filing we don't see that you bought twice as much, I mean a real commitment, not just a couple of thousand shares here and there, then that means that you've soured on it a little bit. And the first we'll hear about it, because you don't want to telegraph your intentions, the first we're going to hear is that you sold the entire position. So that's my only point. It sounds like you're a hold.
Yeah. No, and I would say this, Joe, you shouldn't really say we would buy twice as much because for one thing, we think a long time before we ever go over 10% of a company. Once we go over 10% of a company, we have to report every 2 days, within 2 days, every transaction. Secondly, we can't change our mind for a year and sell any stocks and have a short swing profit, or we have to give it all back to the company. I mean, you become in a much different position at 10%. So if you would have us buy twice as much now, I think that would take us to 20% or something of the sort.
All right, but if you could, here's my point, though. There's a lot of investors out there, Warren, that piggyback off a lot of things that you do, and I'm sure a lot of them bought IBM based on that. Would it be your recommendation that all these people that followed you into IBM double down on their IBM position right now to try and make their money back, or would you urge them not to do that?
I'm not an investment advisor. I wouldn't ever urge them to do anything based on what we do. I mean, if they want to do what Berkshire does, they probably should buy Berkshire. But I'm not an investment advisor. You know, it's intellectual property that belongs to Berkshire, what we're doing with our securities. So we have no desire to encourage people to buy or sell stocks at all, except I will tell people that over time, I think they will do very well by buying common stocks. And I think the best thing for most of them to do is to buy an index fund. I think they're making a big mistake if they're piggybacking me or 10 other people that they may, you know, whose names appear in the paper. That is not a great strategy. A great strategy is just to buy stocks consistently over a lifetime and not worry too much about whether they go up or down in any given month or year.
Warren, let me just
It's what I tell my wife to do in my will. You know, she's going to put 90% in an index fund and 10% in governments. And I've told a lot of other people to do that over the years, and they've done very well.
Warren, let me just get one crack at bat on the IBM issue, which is this. Just to the extent that investors want to understand your time horizon for whether this turns right or turns wrong, at what point would you say, if it did turn wrong, what is it? What would be the trigger at which you'd say, you know what, okay, maybe I did make a mistake?
Well, I was wrong on Tesco, for example, and I was late in recognizing that. You know, they were doing certain things. I thought when they came into the United States, I thought that was a big mistake, but I did not anticipate that they would lose the position that they had in the UK, for example, to the same extent. I was late in recognizing that. We'll sell a stock for one of two reasons. If we need the money to buy something that we like even better. Now that's almost never a case at Berkshire because the money keeps coming in. So that was the case 20 or 30 or 40 years ago, but it's not the case now. And now we'll only sell something basically if we think that the company is not worth what it's selling for.